Hello and welcome to season 4 of the Mic'd Up Show. I'm starting this one solo here, but this is the season where every mortgage has a story. The Mic'd Up Show has become the ultimate hub where hidden stories behind the mortgage industry come to life. Again, I'm Michael Kelleher, and in every episode, we dive deep into the entrepreneurial spirit, the strategic insights, and the breakthrough innovations that built the world's greatest mortgage companies. So whether you're advancing your career, scouting for industry leaders, and we always try to bring access to different conferences like the Mortgage Bankers Association, or you're exploring opportunities in fintech, prop tech, whatever you're trying to do and get into the mortgage space, you're in the right place. So get ready to unlock the story behind every mortgage. Let's dive in. Today, we have Deb Jones, who has over 35 years in the finance industry. She's a certified mortgage banker. We've had quite a few shows about the value of a certified mortgage banker. And in addition to being a certified mortgage banker, she has a comprehensive understanding of the capital markets. That's her focus. Secondary, she has been on lender roundtables. She's been in various trade organizations. She's held leadership roles. She currently actually serves as secretary of the CMB Society. And please, we'll have in the show notes some of the other shows we've had where we really do plug the CMB. It is the ultimate accolade in the mortgage industry. She speaks on policy issues. She's currently SVP Director of Capital Markets at Citizens Bank. We will talk about how she is on the board of the um, the W Collective, the Capital W Collective, and she's here with us today. So, Deb, appreciate you joining us. I will always start the shows with taking the audience somewhere. So, you had mentioned your first boss in capital markets was a woman. And at the time, there may have been a handful of them. It sort of stood out to me because of what you're doing to push the envelope forward nowadays. We always love history on the show. Can you tell us a little bit about her and the industry at that time?
Sure, and thank you for having me on the show today, Michael. Barbara Chauncey was literally, I think, one of maybe less than 5 women in the country in head of capital markets back in the 80s. And so, she really knew kind of how to motivate and drive forward careers for her team. And I think the development of those people really garnered her appreciation in the industry broadly, whether it was relationships with other investors or inside the community at the lender that she worked for, whether it was at the time that was the former SunTrust. I think it was Crestar or United Virginia Bank. I can't remember, it's so long ago. But very bright, polished, smart, practical, walked the talk, collaborative. And so, and she also called it out very direct, right? If there were issues, she stood her ground in her position, but she was a good listener. So good role model as a leader, first and foremost, right? And I think that garnered a lot of respect from men across the industry that worked with her. And to this day, when I run into them, she's long since retired. They remember her with great spirit, love, and appreciation for what she brought at the time. And she was very much a real role model for me, as well as other people that, were men, women, diverse of all types. But she was key.
And she was located in the Southeast at the time.
Yes, yes, which was even more rare, right, than New York, for example. But when we go to New York, she was able to be very adept at the group and know her audience. And I think her Southern accent was charming, but it was not a detractor. To be honest, it was great how she was very well respected. Because sometimes, honestly, we know that is kind of met with sleepy South or what have you. So she was great, just great. And I still stay in touch with her to this day.
Wow, that's so she's active and curious about the industry. It seems to.
Yeah, she always wants to hear what's going on, right? But she's very well retired and relaxed. Let's just say that because the industry at the time was going through a crises in the 80s with we recall the double digit and interest rates, deregulation, which will lead to some of the other things I think we're going to talk about here today. So, and the beginning of real capital markets or secondary marketing and mortgage land with the onset of securitization from the GSEs. I know everybody says I was part of the first armed security, and I think a lot of lenders were, and she would claim the same.
You're on mute, Michael. So I'll just say during the SNL crisis, um, you handled the RTC assets when the industry was on fire. I know Mike probably knows much that better about that, but someone like myself read that, really curious, always interested in learning. So maybe you could tell us what that is. I know it stood out. You didn't flinch during it. You figured it out. So can you not only tell the listeners about the crisis, but what we can learn from you on why it was a crisis and how you worked through a crisis?
Yeah, sure thing. Amazing time in my career, and sometimes I look back at it and say that was so unique. And you think working for the government, which was the Resolution Trust Corporation that goes built out from the SNL crisis. So what it was for those that are too young to remember, and I am envious of your youth, by the way. So it was from 86 to 95, and approximately a third of the SNLs failed. That's huge, right? And it really resulted in a taxpayer funded bailout and led to the regulatory reforms that a lot of are underpinning to today from in 1989. And that's when the Resolution Trust Corporation was built as part of the FDIC to dispose of assets to reduce the taxpayer financial burden. And that crisis was such a mismatch of regulations to market conditions, a lot of speculation and moral hazards, fraud, good old boy loans, I'll be honest with you, big ones that failed. And so that's really what led to it. You might even remember, and this sounds political, it's not, but Hillary Clinton was, and the Clintons were tied to Silverado out in Colorado. So that's that crisis. So the FDIC typically would take over an institution that had failed, dispose of its assets to reduce, the burden on the FDIC insurance fund by recouping, money for those asset sales to other investors who get them at a cheap price. RTC was designed to try to consolidate that focus, specializing in a variety of assets, commercial, residential, performing, non-performing. And so in that structure, I actually chose to go there. I didn't lose my job. Some folks were ousted from their jobs in Wall Street, from Freddie Mac, trading desks, SNLs, et cetera. And it brought together a good group of people. And then what was formed was a pilot program instead of the traditional disposition of assets through committee. If you can imagine an 80 cents on the dollar recovery, we actually reinvented our own uh, secondary market ecosystem within the RTC. And that was just, you can't learn more than having that gift, right? Because you have to draw on the collective knowledge that was in that group. We did have people from Freddie, we had people from Wall Street, we had people from lenders like me that had managed pipelines. And so we had a pilot, it was 10 billion to test to see that if we created infrastructure like using due diligence, we worked with Fannie Mae in particular to create a securitization structure and a contract that went with it. And we figured out how to overcome challenges when you have a failed institution and loss of knowledge or records or poor record keeping. How do you keep the chain of title from mergers and acquisitions unbroken so you can sell the asset to prove ownership of the asset. I mean, really interesting things like that. And we were able to dispose of I did with another gentleman, 7 of the 10 billion, and we recovered 97 cents on the dollar. So, that was a lot of additional recovery, proof of concept. And then really what happened from there for the rest of the tenure of RTC, maybe another 3 years, we were at the beginning part. The Wall Street firms stepped in and just kind of took it from there because the asset marketing specialists or deal managers were really re-entering the industry. And that's when I moved over to Greenwich Capital on Wall Street and actually went on the buy side of that transaction. So great experience.
It's interesting because that's a lot of change going on with the national crisis. Continental Illinois started with the first bank that failed, and it just tumbled through. Can you tell us a little bit how you put yourself in a position where leaders put you into roles that you really didn't know, and when you don't know that, it's very uncomfortable, and especially when you're dealing with crisis. Can you tell us about not only the roles that you were in, but how did that feel in each step of the way during those crises?
Yes. Whether during the crises at SNL, trying to reinvent the wheel with limited experience. I mean, it wasn't like I was been in the business 40 years. So you learn how to collaborate and get comfortable with what you know and don't know and ask questions. So that makes you trustworthy because people don't really think what I'm trying to say is that those other colleagues depend on you because they know you're in the game. You are going to raise your hand if there's an issue, and that way the success of whatever we're doing together works. When I was put into other roles in my career, one of them was when I left Wall Street, I had an opportunity to become a principal in a startup consulting firm and do a lot of things I'd never done or only touched on. And so now I have to, drum up business and execute on delivering what their needs were. So small institutions wanted help with loan sales that like a credit union that didn't have that knowledge of Ginnie Mae securities. I hadn't done a Ginnie Mae security in a couple years, so I had to refresh. So you have to kind of count on your resources and your ability to make it happen, and deliver. Quality control, we did that, and I certainly understood what it was. I had done some underwriting, some processing, but I would not have called myself an expert. So being resourceful is scary. There were a lot of long nights because I'm just kind of creating from the basics and asking questions, but delivered effectively. And that gives you confidence to move on. And then I was able to step into a chief administrative officer role at Charter One because of senior leadership left the company abruptly. And next thing you know, I'm managing operations, I'm running joint ventures, I'm president of the captive reinsurance program, and I didn't even know what the hell that was. So, I had to understand it. But, again, it's picking up, listening, active listening to those that are doing it. So as a leader, you need to work bottom up too. And that's what I learned. You just don't come in and go, I'm the leader and I'm going to dictate what I think. You need to listen and garner respect. And even the sales organization, I still had capital markets under me as well. So, and I had sales briefly until they found a new head of sales. And I remember my head trader was teasing me saying, oh, now you're giving some more exceptions, price exceptions than you normally would. Cause I'm like, yeah, I'm wearing 2 hats and it's a little more balanced. So I learned balance. That was really critical and starting to think as a strategic business person and not just an expert in an area of the business.
As a business person, when did you get affiliated, or when did you decide, you know what, I really need to join the trade organization? the Mortgage Bankers Association. When did you decide to join the MBA? And can you tell us about that experience and how it brings that feeling for you?
Yeah. It Paul Reed was a gentleman that ran Investors Home Mortgage and then American Home Funding that was owned by Rochester Community Savings Bank. And he was very involved. So was Barbara Chauncey. And so that exposure, and then Paul became, even though I had left by then, he became not only served as the chairman for his year, but he became the executive director for a number of years, like in the 90s. So I had also gone to the School of Mortgage Banking to just learn. I wanted to propel myself forward. I wanted to become a CMB, and I did. But I also got involved in the local chapter first, the Richmond Mortgage Bankers. I became president of that. Um, and then the Virginia Mortgage Bankers, and I was humbled. I got Virginia Mortgage Banker of the Year in 2001 with trying to drive membership and things like that. And I started to really understand the pay it forward feeling and the networking, not to go get another job, but I like people and I like to learn what people do. And I learned from them. And I found they were learning from me, which was humbling because I never looked at it that way. And so it became great in terms of relationship building. And now I look at the friends I've had between that era and then evolving through to today, in my role as vice chair of the CMB Society and having been head of the capital markets committee at MBA after being on the committee. And you don't just show up and take these leadership positions, is my point. Career or engagement, you need to earn a right to be in a leadership role at these trades and give back along the way. And I didn't seek those out. I just was getting in there, liking to solve a puzzle. I love puzzles and crosswords and things like that. And so, like when the DTI crisis, or I say crisis, it felt like a crisis. The DTI, pricing issue came up a number of years ago. This is, God rest his soul, Dave Stevens is working from vacation. He's struggling with cancer, and that guy is still in there doing it, right? So, you get that sense of community and care to try to solve problems. And, places like Housing Policy Council do that, Urban Institute, MBA. And it's awesome. And now being on the board of directors at MBA, I'm, really amazed at the commitment and the people at that table that have given their careers, whether it's a Deb Still, who was not only chair, but she's head of the Opens Doors Foundation. These are people that are passionate. Mark Jones, Bob Bricksmith, Ed DeMarco over and Meg Burns and others over at Housing Policy Council. That's what they want to do. And, that's what I want to do too. I want to say, hey, how's this new Vantage score going to impact us? We won't focus on the political per se. We need to focus on what's a safe and sound way to implement something that, the government wants us to do to help customers. There are consequences. So that engagement in the industry, long-winded answer, sorry about that, but the importance of the subcommittees is that you can actually be a voice, listen, learn, contribute, and collaborate, and think about if we didn't do that, we'd all just do what they said, and then we'd create these costly, complex, unintended consequence outcomes. It's not to say we can't do that because that makes us lose money. It's to say, hey, there's a regulation that this DTI, if you price it this way, is going to have a negative impact on the customer, or on the lender where they have to up their price. So that's the national advocacy at MBA is where we also have this tethering to the lawmakers of our country, and like the recent trigger leads that Pete Mills and Bill Kilmer and everybody in the industry shows up in March or April of each year to the Hill and really make a difference.
We certainly have our own show here on the power of the CMB. We've had our own show on advocacy and helping people prepare why they should go down there. And I talk about how many I've been to. I do love the subcommittee. I think many people aren't aware of how easy it is to actually join a subcommittee if your parent company belongs. And how in this day and age, people are always looking for volunteers, all oars in the water at the same time. And I'm on the board locally in Massachusetts. Shout out to Very Rare for a non-lender to be on it. And it's where a lot of journeys should start. And so we try to have this show so that people can understand that the leaders like Deb are accessible, whether it's national or you would think she would be national, but you could actually just find her in Virginia or whatever other state event she's going to. The trade association, obviously, it just amazes me that the 30-year fixed still exists despite all these crises. So, you have to think the trade organizations that you were mentioning, like the Mortgage Bankers Association, the Urban Institute, and the other one, are a big
HPC,
reason why. Which one was it?
HPC, Housing Policy Council. And remember, Ed DeMarco was a former FHFA director, obviously. So that's a lot of talent in Washington.
Yeah, he can put a lot of people in the room, is what I've heard. And then the way those trade organizations work is obviously through sponsorship and helping that go, and how our show works. So we're going to take a quick commercial break, hear from a couple of our sponsors. We are always looking for more sponsors to keep the show going. I don't think there is a better show that promotes the family of leaders in mortgage like we do. And if you want to be part of it, please reach out. And if you're watching, please give us a subscribe and also listen to these vendors. And if you're in the mortgage industry, check them out and tell them you heard it here. We'll be right back. Want to take your business to the next level? As a longtime trusted mortgage service provider, Mortgage Connect works with some of the largest lenders, servicers, and institutional investors, providing cutting-edge solutions for everything from title, closing, escrow, and default to capital markets and risk solutions. Mortgage Connect brings it all to the table, redefining mortgage lending with innovative digital solutions that can elevate your bottom line.
It's time to use AI to revolutionize the way you do marketing in 2025. With ADM Intelligence, we have access to 5,000 consumer data points and proprietary AI technology that helps you understand who is in your database, what's the likelihood of people to do a real estate transaction, and also who they are. So for example, someone who's 50% likely to transact the next 6 months, who's a first-time home buyer, should receive very different content than someone who is, let's say, not as likely to transact, that already owns a home. And of course, our content team will provide you with all of that turnkey out of the box to market to everyone in your database. So to learn more, come find us at ICE. If you're there, we're booth number 327, or go to our website, thinkadm.com. Love to walk you through a custom demo of how AI can supercharge your marketing this year.
Where the company can do the configurability. So we have no code on this, so they can go in their settings, they can set it up all the way down to the loan officer if they want to. We also have a customer support team that's assigned to each account. If they want, they can overhaul everything if they wanted to. They have a new product, especially dynamic apps. With dynamic apps, we can fit multiple. We can fit the Fannie Freddie loans. We can new construction, one-time close, HELOCs. Whatever those workflows are, they can design that workflow for each individual app. So it's not a static app. And plus two is, as they're answering those questions, it'll ask them specifically what they need. So the borrower has everything at their fingertips right then and there. When a question gets answered, certain documents are required. And we have that engine that handles that. So if it uploads directly into Flow5, pushes it automatically into the LOS. If the loan officer, they are able to set it up where it looks like if the processor needs something, they can communicate as a team. So it looks like it's coming directly from the loan officer that they're already used to and have that relationship with. So it's not somebody that they never talked to. Now, what's going to take it to the next level is the AI and the OCR piece.
Thank you to our sponsors. We're here with Deb Jones. And Deb, I like to say there's a stigma out there. It might have been COVID driven. The younger generation now likes to switch employers. If you're not asking why you shouldn't switch, you're not doing the right thing. Mike, I think we talked about, the importance of the CMB, the advocacy, and she's really, done it all in 35 years of experience and able to really be the beacon of really everything of getting involved with the Mortgage Bankers Association was very cool to hear. What did you think?
Yeah, I think that there there's currently a great, there's a number of great people that are just participating in the advocacy of our industry. However, I honestly believe that there is a lack of participation by non-executive people, right? I would say there's a lack of participation at the origination level. There's a lack of participation at the maybe at the ops level. And I think that she does a great job of giving us the story of how she worked really hard to earn her position. And through her earning of the position, she was able to work her way up into leadership to advance the cause and industry for independent mortgage bankers and also the mortgage industry, and also how she's able to lead not only by example, but by trade at the same time. And I think that's powerful for us to realize that it's not just the executives that are doing this, but they really had to work their way up into leadership through experience.
Yeah, one of the questions I'm excited to ask her, and hopefully we get to it. We had a great show, whether we get to it or not, but I excited it's prompted up there is just her experience with technology over the years. And if she's been to all these places and even consulted on it, we've had so many advances, but no matter where it is in the mortgage, everybody still says, despite all the advantages, we were underwriting this many more mortgages. We were probably hedging this many more. And it'll be interesting to see if it's in this sector as well in mortgage. I was about to get her back up here, and let's hope it does work.
Well, I do want to mention it's hard for anybody to imagine going through two crises. The first one, the SNL crisis, and then the second, the financial crisis. So you had one in 1987, and then you had one in 2007, and so to have her acumen, her experience to lead us into the whatever could be a next one. Really, it gives us some insight of either to mitigate a crisis or to lead us into a better environment for our industry.
And hopefully we don't have another one soon. And that's why Deb is paying it forward. So if this works here on the microphone, we'll continue. If not, we'll probably outro and do a mini show about the Capital W Collective. But Deb, let's find out right now. Can you tell us about the origin story of Capital W Collective? We'll tell you real quick how the mic's sounding.
In early 2024, Leslie Winnick, Amy Creason, and Pat Peters created this idea of a nonprofit that could give back to women and their allies. So I want to be very sure that the audience understands that while there's an underrepresented group of people that maybe aren't aware of capital markets, haven't traditionally explored it, this is a way for us to use those that have been in the space, male or female, our allies, to get awareness of capital markets or help elevate, or empower them in their career. So the spectrum is still, really from anybody who's not aware of it to those in the industry. And we want to pay it forward through education, things like this, and free education, Speakers Bureau. Then there's some insights like what you're doing with Take Fives that would interview people in an interesting background, hopefully, and their story. And I think it just gives folks that listen to those people insight into what you can do. There's even a new mentorship series that's 15 to 20 minutes long that'll be coming out very, very soon. So the whole point is to not step over the MBA or some of the great programs or materials that others produce for their entities or the broad market. But we find that we're one of the few that focus deeply in capital markets. And it's not even just for those in capital markets. Let's say loan officers or the lock desk or the salespeople want to have deeper insight into pricing. And it's also going to range from the basics to the masterclass. You'll see some material that's very grassroots and simple and homegrown to more sophisticated presentations when we do our securitization series that we're working on. And what we want to do is bring people, and that's the word collective, we want to bring people into this. This isn't about, and I joined the board, last year to focus on education because it's just part of what I've been doing in the industry. What can we do to bring others who want to give back into this space? So we have sponsors, financial, we have in kind, we have individual sponsors, and we have just individual contributors. And we're just getting started. I would say we're probably a few months behind where we wanted to be in terms of producing, but you know how hard that can be. But we did get our first 2 videos of 4. The other 2 are going to drop this month on the basics of pricing. And we called it the fundamentals to make it fun. We're a little goofy on our video, and we're not ashamed of that. It's just a different way to talk to people. It may appeal to some, it may not appeal to others. No apologies. But at the same time, we want to look at our sponsors, and we have some fabulous sponsors. MCT and Agile are our corporate development sponsors, and they've been amazing. So, we can share content, right? That's the collective again I'm talking about. So they may bring some of their training materials forward that give others access into this collective place to find white papers, training. We may do our own. Catton, which is a law firm, is a sponsor. Poly, a PPE, Citizens, certainly because I'm involved, but I was able to appeal to sponsorship because our colleagues kept asking me, I want to learn more about capital markets so I can understand my role. So the final video that'll come out in a couple weeks is because of being a sponsor, the Citizens colleagues in different roles, sales, ops, etc., lock desk traders, take just a few minutes and say, how does pricing impact their role? So, creative things like that. We'll see where it goes, but I'm excited. We've got several other major sponsors coming along, and that will only help deepen our commitment and delivery, upgrade our website, get a CRM system so we can work on our speakers bureau, and make sure we've got people that are newer in the industry getting asked to join panels and things like that.
Take us to the first phone call or the in-person meeting when you were first asked to join the board, and how did it go from that period? I mean, of course, tons of people, but when you're asked to join leadership, can you tell us just how it went for that experience?
I was really pleasantly surprised at the receptivity. I was expecting a little bit more of, look, everybody's out there doing a lot of what you do, what we want to do in different shapes, ways, and forms, but it's a lot. That's social media today and how we communicate. So where do you add different value to somebody who wants to participate and or sponsor? So, we just didn't apologize for where we're starting. Yes, we need money, but we're also going to give blood, sweat, and tears. This is our mission. And the feedback I got was, I'm contributing over here at X, Y, and Z, and I don't feel like I'm getting out of it what I wanted. So I want to show my brand, my company cares and wants to contribute in education and evolving the next generation of mortgage bankers, right? So that was a surprise to me. Very happy about it. So that was my first experience, and that's been 9 out of 10 of my experiences.
Yeah, I find the industry falls short on the video you're talking about where people say how pricing affects them. When you go in and you consult or shadow people, finding out what that actual person does and documenting it, it never reaches like the community or the mainstream. And so there really is not a huge breakdown of what people do. There's a little bit of what people should do. It's great to see you're bringing it to light, especially on the capital markets side. I really like this question as I was writing it down, but what are you most proud of the Capital W Collective is building that no one saw coming, or maybe you didn't even see coming?
I think the concept of the collective to try to pull together a lot of information from a lot of great resources that is really not competing, but helping advocate for those other resources, right? So, for example, MBA is an in-kind sponsor, and they deliver great education. But David Upton, asked us to deliver the secondary marketing component of the master classes they're doing for their board of directors and C-suite executive sessions. And I didn't see that coming. Like, that is validating, and it's a mutually beneficial way for entities. Like I said, whether, I think we're going to be putting something out that Polly did 2 years ago, and someone says, oh gosh, you're really scraping for information. No, the point that we're going to make is it's still relevant 2 years later. And, listen to what we were saying 2 years ago. What's changed? What's different? Those are thought-provoking ways. And Polly benefits from, being, we have to be aware of who's there, what do they offer, and how can we help each other in the industry not only self-promote, because that's not really what's at this. This has to be viewed as nonprofit giving back, education, growing the next generation or evolving the current generation as we who are older hopefully exit in, not 2 years, but maybe not 20 years. That's the way I see this being unique versus individualistic company by company.
No, it does. The MBA part's very mission driven because you're teaching and you're giving a place for people to discover it and actually be part of it, which is your mission. How can we make people more aware of it?
Deb, you built systems in capital market long before there was a second marketing platform for companies, right? It was just like, this is what you, before it was a buzzword, this is just what you did, right? And I know technology is advanced, but how has technology advanced the process in itself?
It really is. It's been exponential and more so in the last 10 years, right? So when you go from the beginning where you're using the servicing system output on closed loans on the servicing system, a yield book, a calculator, HP12C. I still have my 40-year-old original one, to, using DBase, Basic, Fortran, Lotus, to, then the QRMs of the world that come into play. And, somebody asked me recently, from an entity that said, oh, we have the first hedging optimizer, and they're a great company. I don't say this with any dismissiveness, but it shows that the younger generation isn't maybe aware of the competition. So I called QRM, who I'm a client of and a fan of, and I said, hey, I remember using the hedge optimizer way back in the beginning as we were trying to look at scenarios, right? So this is part of your tech evolution. And I said, have you kept up with it? And they said, oh, yes, we have. We have done this. You can do it in the cloud. You don't have to do it in the system. We still think it's a great tool. And yet at the same time, a lot of large lenders that have more staff and more sophistication with quantitative analytics and so forth can build separate tools, not to compete or replicate, a lot of times to validate. So then you learn how to become efficient and evolve. That best execution is where we really needed to get to in the last 10 years when you have spec pool trading versus that wasn't even a word, 30 years ago, specified pools, and faster ways to do it, which is the next iteration through the AI. Where can you leverage AI in a process efficiency way and still have the human intervention to make judgment calls that I frankly think that, AI can't see at the moment, right? You can't eliminate the human entirely, but the PPE engines and I think the one missing piece that still has to evolve better is all these vendors out there, and we're putting multiple vendors together for technology, PPE, LOS, hedge risk management system, title vendors, credit report, all of the above. They have to, instead of competing with each other and saying, I'm not going to integrate this PPE into my LOS, you better let the industry choose what it wants to choose and tether the two so that you can have this seamless experience for yourself as the client and ultimately the customer to have not even lights out processing, but kind of lights out processing like you do in operations these days. You need to think about, I'm going to lock the loan. You might you might lock it in Blend, you might lock it in the PPE, but they all have to talk to each other real time and update each other. And I need to see it as fast as I can, not overnight, so we can hedge, effectively. So the connectivity still has room to be efficient across all platforms, but I see the momentum picking up.
How do you scale using technology? How do you scale capital markets execution using technology? When you mentioned a lot of different types of products that are available, but when you're managing the hedge on an entire pipeline and you're structuring deals, so on and so forth, how do you scale that using the technology that you've mentioned?
You're going to laugh at my answer. People. So why people, right? So I'm going to give you a live example and tell me if I've hit the mark on answering your question or not. A number of years ago, I had a very small staff, very good staff, and we had good technology. Again, I think QRM is, for me, the right platform, and our own homegrown pricing engine, and then our own PPE. We, as a regional bank, it's harder to be investing as fast when you're sharing resources, dollars across an organization that has different business models. So sometimes we're slower at scaling and reinvesting either internally or looking at external. So during the market volatility in the 2020, 2021 era of COVID, you had capacity challenges, hedge challenges, and scale, not just on the origination side, but in managing the analytics to do better from your technology output. So long story short, where I'm going with this is I invested in a number of more people with the right skill set, including abstract quantitative analytics, like a lot of the larger entities I know have been doing for decades. So if you're going to be in the position to scale, you have to get those folks in to know, where are you? Where do you need to go with technology to scale? And next thing you know, we have automated processes to running information. So when the analysts come in the morning, instead of putting it together, it's already run, they're validating it, they're evaluating it. And when the market's opening, they're ready sooner in the day. And that's the benefit of technology. But you need people to get your technology there and then the experts to use it to then see and best execute. And I hear everybody about AI. It will come in and play a part, but it will not, take over, in my opinion, at least not anytime soon. I'm sure, one day the whole world will be run by robots. But the ROI that we got on the investment in those people was sevenfold. And we are more efficient, we have better analytics, and we make more money through the combination of advanced technology and scalability to pivot to different types of executions, like in the PLS market for non-owner occupied versus just GSEs. And you can see something faster, make decisions faster, and spend the time to do those other things that you couldn't do because you're not scaled in tech. But you need people.
Final question, and thank you again for coming on. Do you see all of this future thought process, whether it's people, like you said, technology, is it going to continue to be very GSE driven and honing in and perfecting HUD and FHFA loans? Or do you think somewhere over the next 5 to 7 years, there'll be a swing back to where the market is coming up with their own loan programs and more diversity and more reasons to use tech or people to not have more of the same today?
That's a good question. And one I think we are all talking and thinking about. So you've hit the pulse of what is in front of us and ahead of us. And I can't say I know the answer, but I think as we chew on it and we think about where does the 80% get addressed as efficiently as possible, supported by whom? So one theory is, if the GSEs go private, what does that mean versus a true PLS market, right? But what's the PLS market missing? It's expensive. The investors can shutter their doors, when there's looting on the street, so to speak. So you worry about liquidity, but technology and focus, like maybe the common securitization platform, is a real nugget there that the GSEs created, that if we integrate it into the ecosystem, then your investments into different programs, whether it's HUD becomes all the affordable, the GSEs go private, but with an implicit or explicit, guarantee. So it's got a different look and feel than the PLS. And you still have the competition between the GSEs and the PLS like you do today, whether it's, non-owner occupied or what have you. So when I say all that out loud, it does have to evolve to a greater efficiency and modernization. And I think there's been some really great steps. I remember talking about SSV, single source validation, with Fannie Mae in 2009. And it's just starting to get real, I would say, comprehensive adoption, because people have poked at it. So that's just an example of, once we get on a roll, I think it'll be more prolific than it has been. But the regulation has gotten in the way, and the change in the industry from politics, and different leaders and directors have made for a lot of distractions for lenders and adoption. But I've also seen an amazing effort by PPE companies or others trying to leapfrog and get ahead. And those efficiencies to get the costs down is a single-minded focus of the industry. So if you get a single-minded focus, we will probably be able to execute in the next 5 to 7 years, like you said.
Oh, I am biting my tongue. Boy, do I miss the days, Mike, when we just used to talk about current events and how fascinating and fun that is. That was packed in with some amazing nuggets. I will say one thing. We had Steve Thomas on the show 2 weeks ago. He has a long, extensive background. Please tune into that show. And he mentioned the CES, I think, the
Common security, CSP.
Yes. Yeah. And then Shant, who normally doesn't post about these type of things, he's mostly sales, president of Rate, posted about it today. Deb Jones says it on our show today. So you go from never hearing about it to it popping up 3 times in the last 2 weeks. Where there's smoke, there's fire. I recommend everybody go ahead and Google that. And thank you for joining us on this journey into the heart of mortgage innovation. Remember, every mortgage has a story, and we're here to help you write yours. If you enjoyed today's insights, please subscribe, share with your network, and connect with us on social media. Until next time, keep pushing the boundaries and uncovering the stories that drive our industry forward.